Hello, Maverick traders. This is Imri, and welcome to today's market roundup. All right, today was an absolutely wild session of trading across pretty much all asset classes. So there's a lot to discuss. Let's get right to it. Starting off with some broader market analysis. Well, it was a bloody day in global equities. The S&P was down 3.5%. The global stock market index was down almost 3.5%. Our crypto basket was down 8%. Gold and oil, given their relative volatility, had pretty flat days, but there was a lot of intraday movement in both those asset classes as well. So equities more than gave up the previous session's gains. Off the Fed announcement, there was a very bullish reaction when Chairman Powell said that he was taking off a 75 basis point hike off the table. And the market took that as a bullish turn of events. However, since then, the market has reacted incredibly negatively, as I think some skepticism has entered into the market's collective minds regarding whether or not 50 basis point hikes from here on out are going to be able to do the trick in terms of both taming inflation and preventing a hard crash landing for the US economy. Starting off with the S&P 500, we can see here we've been trading over the last few sessions within the support range that I have cited here, and it's looking like we want to be testing that support range once more. Tomorrow definitely has the potential to bring increased fireworks as the market digests the movement from today's session in the overnight trading session, not to mention the fact that we have US payroll reports coming out tomorrow morning too. So there could be lots of fireworks here. I'm not confident calling this market tomorrow one way or the other. I'm not exceedingly bearish. I think we had a decent bounce off the lows from today's session in the cash market. So it'll be curious to see how the overnight market takes charge here. If the payroll report is a big miss, or a huge hit above the expected results, that could definitely move the market one way or the other. But given the fact that we're trading in the support range, given the fact that we've bounced from the support range every time we've traded down into it, I wouldn't bet against a bullish surprise tomorrow, to be honest. So we'll have to see what happens, of course, but those are my thoughts. If we break below that support range, then we'll have to expand our view of this market and look for some further support levels down below. And over in the total world stock index, it's not very different. You can see here we've broken below that gray support band that I have outlined, but we've also rallied off those lows since then. So it could be a false breakout. I'm not entirely convinced that breaking below, I thought it was obviously a bearish close, but we didn't close on the session's lows. So I think it'll be interesting to see how the European and Asian markets trade, and let's see how that will carry over to North American equity markets tomorrow morning as well. And then over in the crypto market, this is a weekly time frame chart. The reason I'm showing you a weekly is to illustrate this longer term trend line going back to June of 2021. And you can see we're trading pretty much right on that trend line right now. And there's a resistance trend line that I've also included coming down from below. So cryptos are literally stuck between a tight place and a rock here, and we got to move one way or the other. So I think whether we break higher or break lower, there's going to be some exciting energy in this market in the days and weeks ahead to come. So the market outlook has to be a -3 here. It just looks really bloody. But that being said, I would not count out the possibility of a bullish surprise tomorrow morning. We'll see how the session closes, given that it's a Friday. I'm not expecting bulls to kind of storm in here and take charge. That would be pretty shocking to me. But I think in the morning session, at least, we could be in for a bullish surprise, given how the market reacts to the payroll report. So what's on the news calendar tomorrow? We've got Canadian and American employment reports coming out. So there's going to be a potential for some fireworks here, especially in the US dollar and Canadian dollar currency pairs. So that'll be tomorrow morning at 8:30 a.m. Now, over in currency analysis, it's not a pretty story for the crypto markets. There wasn't a bull in sight. Cardano was the biggest loser, but there were no winners here today. It was just a bloody day overall. That's really all I can say here. Cryptocurrencies have been lumped in, with risk assets, of course, and they're higher beta than the stock market. So we can see that reflected here, in their underperformance today. Over in the fiat currency world, it's a little bit more of a mixed bag. The pound got crushed on the back of what was not an aggressive enough rate hike, or at least not to currency market observers. So the pound got absolutely destroyed, but as did the Australian dollar and the New Zealand dollar too. Relatively speaking, the Canadian dollar and the euro kind of held their own. And given the risk-off sentiment, it's no surprise to see the yen put in a reasonable showing. But the star of the show today was definitely the US dollar. And it's going to be very interesting to see if that is going to continue in tomorrow's trading. So the velocity score, the real outliers here on the currency side, obviously all the cryptos are looking really poor. But on the fiat side, the dollar is strong, and the pound and the Australian dollar show definite signs of weakness in terms of negative velocity there. So we're just going to move over now into some potential trading opportunities that I've spotted on my radar here. So first off, we're going to start with dollar yen. I think dollar yen could surprise. We've been in an incredible uptrend since the start of the year, and there's no signs of that dissipating. So unless there's a really major breakdown in equity markets followed by an absolutely dismal payroll report, I don't see anything but near-term upside in dollar yen. Over in the Aussie, this was a pretty clear bear market rally, clear in hindsight, I should say, that got sold. And it's, I have this really important support level outlined over at 69, 67, and it's looking like we want to test that support level here. If I go down to a shorter term time frame, you can see we had a strong move lower, and we're now bouncing a little bit. I'd love to see this bounce continue in overnight trading, and maybe on the back of tomorrow's payroll report, there'll be an opportunity to short the Aussie further. And over in the euro, it's much the same. We have a very key level here at 103.49. You can see that here. It's this prior multi-year low coming in from 2017. And on the shorter time frame charts, it looks like we had a bear rally that got sold, and we're now sitting very tenuously on support. So a break below the support level, I think, gives us a clear runway to test that 103.49, 103.50 level in the euro. Dollar Canada up next. Okay, so the reason this pair is on my watch list is for a couple of reasons. One, we have the double whammy news events tomorrow affecting both the US dollar and the Canadian dollar. And secondly, we're coming up into resistance here. I'm not going to be brave enough to make a very clear, confident forecast one way or the other on this currency pair. I think this is a currency pair we can trade with the energy that's going to be released from tomorrow's news event. On the one hand, I can easily argue that every time we've traded into this resistance zone, we've sold off. On the other hand, I can tell you that fundamentally things are looking very bullish for the US dollar right now, given the market's skepticism of Powell's statements. And if you look at the bond market, they're definitely skeptical that 50 basis point hikes are going to be enough to tame inflation here. So on the back of that kind of news, it's very possible we see dollar CAD break out of this range. On the other hand, if the payroll report is disappointing and a big miss in whatever reason, but the Canadian payroll report is good, we could definitely see a rejection of this resistance level. I think the risk is likely skewed to the downside here. I think the better trading opportunity will be to the downside, but I won't be afraid to play either side of this market if the energy is there off the backs of those news events. In Aussie yen, this looks like a pretty clear bear market rally to me. It's a nice three-wave corrective rally, and in the overnight session so far, we're bouncing. I don't think it would take a lot more for Aussie yen to start getting overbought. And if we do get a bearish market tomorrow, bearish equity market that is, then I think Aussie yen could be setting up for a great sale. Over in sterling yen, This isn't quite a bear market rally. It's not quite a base. It's something in between. I think the overnight trading will give us a clear indication, especially as the London session opens up, in terms of what we can expect regarding further weakness in the pound. So I kind of have this short-term pennant on my chart. You can see I traced this out with the trend lines. I'd like a breakdown. I would not buy sterling yen, however. I think the better opportunities are still short if the market obliges. So that's what I have in terms of possible trades. Now, in conclusion, volatility is likely not over. I think tomorrow is going to be a good trading day. We've got the U.S. payroll report Friday morning, like I said, Canadian employment report as well. Be very careful, traders. Be very careful and ensure that you're position sizing appropriately considering the uptick in volatility. When things are flying around the way they have been, like in Thursday's session, we don't need big position sizes to make excellent returns. All right. So when times are volatile, if you're just looking at the price bars or the candlesticks on a chart, it won't look very different. But when you consider the amount of distance in pips or in percentages that we're covering, these are big moves, folks. These are really big moves. So just make sure that your position sizes reflect the volatile conditions in the market. And that's it for me. Good luck. Stay safe. Happy trading. And I'll talk to you guys soon. Take care.